All right. Hey, legacy traders, it's Tim and Jesse.
Jesse.
Just got to have some fun. Hey, guys, we are doing our market recap. So what happened over the past week and what do we expect to happen for the week going forward? So I'm going to take it. We're both going to spend a little bit of time. I had one trade and it lost. It lost money. But let me get you guys to see my screen. So we'll set that up. Desktop 2. Got it. Jesse, you can see this?
Yes.
Thinkorswim?
Got it.
Cool. Okay, so first let's hop over into Tastyworks. My one position I have on is the same position forever. I'm waiting. I was originally in a long call. I sold a short call against it to make it a bear call spread. I need VMW to be under the short strike of 160 by expiration, which is in 12 days. That's one trade on. It's a pretty hefty loser. If this thing stays under 160 by expiration, I'll lose only 46 bucks. Currently, max loss is the difference of strikes, so 160, 165, plus this debit that I have over here. So max loss in this situation is at 546. I'm hoping for only a $46 loss. But let's go look at UNH. I entered into UNH back on the 1st of October, and then I exited off of technical analysis. I did take a small $5 loss here, and I'm okay with that. I'm okay with, not giving up everything that I've got. So let's look at the first. Where are you? October 1st. It's this day here. And from a technical standpoint, slow stochastics was coming to a pinch and moving up, and RSI was moving up. Maybe fast stochastics was a little bit oversold here, or overbought, excuse me. And then it just moved down. And on the last day of the market, on 10-5, I decided to close this thing out on Friday. And just take it off because I'm not sure if it's going to come down to this 50-day moving average or if it's going to bounce up. But either way, RSI was ticking down. Fast stochastics is bearish, and slow stochastics was coming to bearish, while MACD was coming to bearish as well. So for me, that was enough to say, hey, just take my losses here and go. So that's my two trades. I lost $5 or $10 total because I had two contracts for the week. That's okay. I didn't lose a ton of money. We're still waiting it out. SPY, first off, I think the overall markets, if you look at the SPY, the DIA, the QQQ, and the IWM, all of these look, it's kind of mixed bag. IWM looks the most bullish potential. Technicals are showing a slow stochastic pinch with coming out of bearish MACD. And it's looking oversold on the RSI and stochastics, and it's sitting right on that 200-day moving average, which we've seen it's used previously. So I like IWM the most as a bullish trade. SPY is a little bit different. Technicals say things should be bearish. RSI is ticking down. Stochastics is saying bear, bear, bear. But if you look from a technical standpoint on a charting, I really like this. It's got this January high, and look at where it comes over to. Comes over right to the 50-day moving average or this technical support line. And let's zoom in a little bit more. It's got a long wick on Thursday, and then to that 50, it bounced, had a wick past the 50, and then it came back and closed right on it. So from a chart standpoint, this thing looks good. Monday, my expectation is this thing to move upward to some form or fashion. If it doesn't and it closes below the 50-day moving average, I'm going to go really bearish on this thing and look for about $11 drop, $10 drop down here to this 200-day moving average. And then the cubes, they look the worst in my opinion. This thing looks like it should still come down from a charting standpoint. It's under the 50-day moving average. It's below the trend line, and all the indicators are saying bear, 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 bear. So I'm looking for this 200-day simple moving average, this black line right here, as it used it as previous support in the past. That's my target. What's really great about this is, even though this is bearish, is that it's climbed the most out of any of the indices in the market. So it can afford to correct a little bit, and that can create some opportunity. And then DIA looks bearish as well. From an indicator standpoint, it's all saying bear. And then from a technical standpoint, it could use this 20-day simple moving average as Okay. It could use the 20-day simple moving average as a support, but I'm not that confident in it. And I want to see it come down to this 50-day simple moving average like the SPY and then bounce from there. So that's what I got for you. I had one trade that I closed out, $5 loss per contract, 2 contracts, lost 10 bucks. I'm holding on to VWM, and I'm waiting for that thing to sit under 160. And if I can do that, then it's going to be golden. So that's all I got. Jesse, what did you have going on this week?
This week for me was really busy. As far as the market synopsis for this coming week, I do agree with you. I definitely think IWM has the most potential. It also has the highest IV rank of all the indices, the major indices. So that's kind of
about bullish potential, right?
Bullish, yes, bullish potential. I actually, I'll talk about it in a bit. I actually have a SPY position on that I probably am going to take off tomorrow. But let's jump into the trades that I did close. Let's see here. You see this? You see my screen?
Yeah. Tasty.
Tasty. All right. The first trade I did was an Abercrombie and Fitch Strangle. Let me see here. I got to move the camera over. Sorry. It's all up in my way. Yeah, so this one I entered in on the 13th of September, and I got out on October 1st. That was 18 days, and this was a $28 winner, and it only held $199 in buying power. It was just 2 naked options, 1 short call at 23, and then 1 short put at the 17.
Yeah.
And that one was profitable. That one was
I did the math. It was an 8% return on investment. Good job.
Sweet. I didn't math any of those as far as ROI, but I did math my P&L. So
sure. Yeah.
So Roku, this one is interesting because if you look at this, let me see here. Wow, it doesn't have my Roku for 60 days. That doesn't make sense. Start date is October. Roku.
Do a custom.
Let's do a custom because this one was an interesting trade. Let's go back into July. Let's go July 2nd. It's weird. It's not coming up with my previous trades. Well, this one was interesting because this one was a Roku. This was a call credit spread that I did. It's a $139 loser. But this one is interesting because it is actually an iron condor that I had converted.
Okay.
This one was a $5 wide iron condor, calls and puts on each side, and it was a max loss, full on $500 out, like minus the credit. So it was what I ended up doing was I started rolling my calls down to kind of for credits to kind of eliminate some of that max loss. And then the max loss ended up being my cost basis on that trade was $124 loser. Yeah. So this one I took off a little early because I didn't want to wait. I just needed the capital because it was holding up buying power. So I took that off for $139 loser. And that one was $397 in buying power total. So it was 19 days, not that big. Okay, AMD, this one was a short credit spread, call credit spread on this. It put two of these on. This one was a $34 winner, 20 days in the trade, and it held up 330 buying power on this guy. This one was basically, I did not think AMD had enough staying power, and anything to short technical, like on tech, like IT or technology stocks, I'm all for sometimes, especially AMD. Intel too, for that matter. Let's short them all. Let's just do it.
And the cubes are saying, hey, go ahead and do it.
Right? Cubes are giving it up too, you know. Let's do, I had some oil on, and oil, this was just a straight straddle. So I basically took, I wanted my strike to be 14.5, naked call and a naked put right on there. I took in just under $1. It was 87 cents on that. That one was $404 in buying power. it was the IV rank on this guy was really high. It was kind of like a classic, just throw on some credit spreads, get back into old theta capturing. This one ended up being a loser because, as you notice, crude oil down here has like, when I put this on, crude oil was like 63 and it rallied $10 a barrel. So I got killed in USO and I just ended up taking it off for the loser that it was. That was a 15-day trade. And then GDX, I like this trade. If I could type, there we go. So GDX was another, it was a strangle. It was a naked call and a naked put, 19 and 17. It was kind of tight. It wasn't a really wide strangle, but the average true range on this guy was maybe 20 cents, 25 cents. It hasn't been moving in the last month or so.
Yeah.
Well, gold has recently been finding some buyers, probably because of this market. So, yeah, gold has kind of just shot up a little bit recently, but I was able to take this off for a $19 winner. I just decided, you know what? I need some of the buying power. It was holding up 336 buying power. I've had it on for 3 weeks, 21 days. It was just kind of like, take what I have, $19, and just keep it. Yeah, so that one was that. And then this last trade here in SPY, which I mentioned earlier. So I've been busy in SPY.
Woo, baby.
Busy.
You don't play.
Yeah, I like to play it a little bit, but SPY has been kind of one of those beasts for me. I play in SPY a little bit mainly to hedge some of my short delta, because when you put on some of these trades, you'll end up starting to have negative delta in your portfolio, and I like to maintain just about negative 10 is the most delta I like, and if I get shorter than 10 delta, then I like to put on positive SPY delta trades to offset some of that, to hedge it, just in case, you know, something falls out of bed and I need some of that long delta in there to protect me. So that's really the play that I put on. I put on a SPY debit spread thinking, hey, SPY keeps going up. It was on a down day. So I was like, most likely SPY's not going to go down 3 days in a row. And it has. So I took it off, and then I took it off on Thursday, and then I reapplied it on Friday. And it's also down. That trade, the one that I took was 1 day. That one was a $78 loser, and I just decided to readjust because it actually blew through my long strike. So it blew through that what was it? This was bought to open, 289. It blew through 289. So as you see right now, it's trading at 287.
Right.
So I was like, let's just not deal with this and just readjust. And I readjusted. I have a different position on right now, which gives me a little bit better break even.
And so you're mainly using SPY as a hedge to keep your delta in check.
Yeah, to keep my delta in check. I don't want to get too short. So yeah, to keep that in line, I try to use the SPY as a hedge.
Sure, makes sense. Debit spread, long delta. Yeah, got it. Well, that's perfect. So which market do you feel like out of the Russell, IWM, QQQ, SPY, and Dow Jones, which one are you saying is the most bullish? Which one are you saying is the most bearish?
Most bullish, I'm gonna have to say, is IWM. It's actually touching its like 200-day moving average line, so it's actually dropped the furthest in all the indices. So for sure, IWM is going up. It's got to. For me, please. I think NASDAQ. See, the thing with NASDAQ is the one that I think has the most to lose because it's risen the most in the last 3 months. So it's got the most to go, but it's also the most volatile. It's got a lot of the good tech stocks in there. I mean, you got Amazon in there, you have Apple in there, you have a lot of the big major tech stocks in there that could carry it. So it's a hard play. So I think it's probably tied between NASDAQ and Diamonds, which is Diamonds. So
okay, I think I'm going first place for bearish play is QQQ. Diamonds, I think, has been showing weakness. It took a while to kind of catch up with the rest of the market. It didn't come out of correction. I was the last one to come out of correction. And
right.
And so I think, you know, it hasn't really blown up hard, so I don't expect a big drop in it. Whereas the QQQs has, I think it was the first one that came out of correction since February, and it's been on a tear. And so I think there's some opportunity there. What's great about these pullbacks like we're seeing is they create more opportunity. So all last week it was really what's called sitting in cash, not didn't have very many trades on, waiting for opportunity. And I think we're going to wait into this next week too. But when that bounce does come, there's going to be a lot of opportunity to hop into. And so it could be next week, it could be the week after. But I always talk about, like traders, we're surfers out there in the water, and we're waiting for that perfect wave to come. You could be out there on the surfboard and try to catch every little wave that comes, and it might work. You might travel 3 to 5 feet, something. But if you wait for the perfect setup, then you start paddling, then you catch the wave, takes you all the way to shore, and you have a fun time doing it. So I think we're waiting for a perfect setup, and it could come next week or the week after.
I'm hoping so.
All right, that's all we got for you guys. Till next time, let's build that legacy, and I'll see you in the next video.